Hello traders, this is John with Stock Strategy Circle, and this is the 3 top indicators that I use to trade stocks. First of all, one of the things you have to understand about most of the indicators that are available for trading is that there's only a couple of things that you can measure when it comes to price activity. You can measure the actual price activity. How volatile is it? You can measure the volume of the price activity. You can measure the price activity in relationship to its volume. And you can measure trend. And that's pretty much it. And what you will find is that different indicators do this in different ways, but there is no holy grail with the exception of the 3 that I'm going to show you. You're also going to find that many people have extremely busy charts full of indicators that basically are telling the same story. If you have a volume price action indicator, you don't really need another one. So there's a lot of redundancy out there. Also, the indicator that you choose sort of depends on the kind of trading that you're doing. I typically use the same indicators regardless of the trading that I'm doing. And that's one of the reasons why the indicators I'm about to show you probably became my favorite, because as I page through the different time frames on a chart, they just seem to work once you learn how to use them. My top indicator is going to be volume. And I use volume and I have it displayed in 2 ways. The first one is your standard volume, which runs along the bottom of the chart, which tells you the amount of trades that have taken place for that bar. And why is that significant? It turns out that unusual volume activity almost always precedes large movements in price. And those movements can be bullish or bearish. And it largely depends on the context in which the volume spike happens. So you can't just automatically say that, oh, the price is up, there's huge volume, that's bullish. It may not be. It might actually be bearish. You have to take everything in consideration with the overall market context. Then the other way to use volume is with a market profile style indicator. And these are very handy because it shows you where the volume is based on price activity as opposed to time activity. And remember, all of these price charts are broken down based on time and price. And what the volume profile tends to tell you is really where the support and resistance actually is. It also helps weed out whether or not a stock is undergoing distribution or accumulation. And you'll know that part of my trading style is first trying to identify what phase of a stock's trading cycle that stock is in before making a determination of whether or not I'm going to trade it. Your volume profile is going to be displayed on the side of your chart with the spikes moving horizontally instead of vertically like your time-based volume bars. And what you're going to be concerned about mostly here is where the spikes and gaps are. We're looking for unusual volume activity. So when you have a large swath right here, what that shows you is there's a lot of churning, that is indecision in the market. And that indecision can be bearish or bullish depending on what the price activity is doing in relationship to all of that action. So in general, when you see a market moving sideways and it's spending most of its time above what they call the point of control, which on your volume profile chart is almost always going to be a line coming out of one of these peaks, that tends to be accumulative action. When the price activity is churning around below the point of control, that tends to be distribution. The other indicator that I use frequently, there's 2 more to cover, is a volatility stop. Sometimes it's called a V stop, sometimes it's called a volatility stop loss. You can also get a version of this called super trend. Super trend is a little bit more complicated than a volatility stop, so I just prefer to use the volatility stop. And so what a volatility stop loss does is it accounts for how volatile a particular security is over a set period of time. So commonly I will use 4 times volatility over 8 days. And that displays on the chart as these little dots. Sometimes it's a line. I like to use the dots because I use this a lot of times as a determination of where a good place to trail a stop loss is. So when the dots are above the price activity, that's going to be a bearish trend. And when the dots are below the price activity, that's going to be a bullish trend. And when the dots are flipping back and forth, like we see on this chart, that's going to be churning. And one of the interesting things with volatility stop losses is that the interpretation of them changes greatly based on time frame. And so let's say that you're not a big fan of volatile stocks, but you got a hot tip on something and you want to trade it for whatever reason. You think it's going to be the next big thing. You can use the volatility stop loss in order to determine your trade size, and that's mostly what I use it for. I have a proprietary indicator that I created to use on TradingView, which more or less tells me at a glance how many shares of stock that I should buy based on my personal market risk profile. I'm a cheapskate. I recommend that for most of you, you don't risk more than 1 to 2, maybe 3% of your account size in any one position. And that may seem incredibly low. Why? Well, first of all, with modern technology, it is super easy to keep tab on stocks. I think right now in my account, I might have like 50 open positions. And you would think, God, what a nightmare that would be to take track of. Not really. I go through my whole account in less than 5 minutes because I'm not looking at fundamentals. I base my trading on price activity. I typically only trade leading stocks. So when you set your criteria in such a way that you're stacking the odds in your favor, it's much easier to manage your stocks because when you're selecting them right, they're going to have a tendency to go up anyway. Okay, so having said that, once you determine what your area of volatility is, if you're looking at this particular chart as an example and you see all of this churning activity and you're like, wow, I really want to buy this stock, but I don't want to get stopped out, but I definitely don't want to stay in it if it's going down. That's when you just increase your time horizon. So this is a daily chart. Let's take a look at a 3-day chart. Now, when you look at a 3-day chart, you get almost a completely different volatility picture, and it is still tradable. What's going to change on the 3-day chart is the amount of shares that you're going to purchase based on the volatility. So let's go back to the daily. On the daily, if I were to buy this spike over here, this thing is telling me that I would buy 100 shares. Okay, now that's going to be the same amount of risk dollar-wise as if I came over here on a 3-day chart. We're looking at the same, actually this is the day over here. We're looking at the same spike in price, but it's on the 3-day chart. It's telling me I should only get 40 shares. Why? Because the price movement between here and here is wider on a 3-day chart. Now, maybe you're looking at this and this is still too volatile. And you're like, I don't know, the way this is, I'm probably going to get stopped out. Well, break your time frame down onto a weekly chart. Now, if you look at a weekly chart, even with all of this volatility, okay, again, we're looking at the same stock, it becomes really easy to determine the trend. But what happens when you switch over to a weekly chart in some cases is the amount of shares you might trade at any one time goes down again. Now, interestingly enough, on both the weekly and the 3-day, off of this spike, which is a buy signal right here, you know, and I'm going to give you a free charting lesson. This is almost a no-brainer buy. The very next week, if this thing, or the very next bar, if this thing opens and remains up, that's a pretty strong buy signal. Now, you have to understand that your time horizon for the trade is going to change in between the time period on the chart. So what does that mean? Well, from here to here, and you would still be in this trade if you were using the volatility stop to determine when you would get out of your positions. From here, this is Monday, October of 2023. We are now in September of 2024, so this is almost a full year of price activity. If we break this thing down to a daily chart, within that same year of price activity, you have one buy point where you would have purchased, let's say, about 100 shares based on this volatility indicator, an area where you might have been stopped out. So there's one trade, and that trade took place over a period of, let's see, November to January. So that was a trade that took place over a period of about 60 days. Then the chart gets a little sloppy and it's kind of hard to figure out what you're going to do next. You have this huge day. This covers 3 days worth of trading. There's a big spike and then immediately the stock failed. That's very bearish. So if you were to buy this breakout here, most likely you should have sold out somewhere in here. Okay, so there's another period of one trade that took place over a period of about 3 or 4 months. And again, we're talking about exactly the same stock. The only thing that's changed is the time horizon that you're trading it with. Now, if we look at a weekly chart, with a weekly chart, you have the same price activity. You had a buy signal, which I believe would have occurred right in here. And now it's a year later and you're still in the same position. And this is making trading decisions based on almost exactly the same criteria and the same stock, but with different time horizons. And those are kind of personal decisions. It depends on how much money you have in your account. It depends on how volatile a particular stock is. It depends on what your goals for trading are. Some stocks you want to be in for a long time and some stocks you don't. It really just depends on the price activity. I do want to point something else out on this chart. We have a little tiny bar right here with a giant spike in volume. In fact, as near as I can tell, this is the largest amount of trading volume that has taken place in this stock since 2021. During that same time period, this is a weekly chart now, price moved hardly at all. And that's very interesting. This stock may be about to go through a change of phase, but we're probably going to know on Monday because as you see, almost all of this trading volume took place on Friday. So we peaked up. Highly likely there was a ton of buy orders sitting right here that got triggered. I can't tell where this thing closed. Let's zoom in. Okay, so we peaked up, we activated all of those buy orders, and then we closed in the middle. So this is bearish activity, but it really depends on what happens Monday because Friday was a weird day in the markets anyway. Okay, so we covered volume. We covered the volume profile. I consider those two as one indicator. Really, if you want to use them effectively, you want to use both. And then the volatility stop loss is almost indispensable with me. I use this on practically every trade that I use. I use it to determine position sizing. I use it to determine when a trend has changed. I use it to determine when a stop loss, should be hit. It's very useful. The other indicator that I use a lot is called price volume trend. And what price volume trend is good for, actually I got another way to show you this. A price volume trend takes a running total of the amount of volume moving in and out of a stock based on the price activity. And so generally what you want to see is that if the stock makes a new high in price, you want that to be confirmed with the price volume trend. New high in price should be followed by a new high in price volume trend. And on the downside, that is also true. If the price of the stock makes a new low, price volume trend really should make a new low as well. And so the way you use this tool is you're looking for divergences. You're looking for times when things don't quite add up. So during the stock market turmoil around COVID, when the stock market collapsed, I was more or less completely flat with the exception of I had a few short positions on. And the reason I did that was because I was watching the market make new highs, and I'm talking about the SPY and DIA, but price volume trend was not confirming those highs. The market kept going up and price volume trend was lagging significantly. Typically, that is a sign that the market is undergoing distribution. We may be in that kind of environment again right now. It's very hard to tell. I'm not going to get into that, but I'm going to show you on the Dow SPY where we are right now. So we just broke out. We made a new 52-week high on the SPY. And so you would think that if we weren't going through distribution, that you would have a new 52-week high with your price volume trend. But we don't. However, I'm still not bearish because I think we're on the verge of a hyperinflation. And since I trade mostly price activity anyway, I'm not flat. I'm long like a madman. But again, if the stocks get weak, I'm just going to sell them all. I'm not married to any of these stocks. I'm just dating them. If we look at the Dow, we have a similar picture. The Dow has made a 52-week high. Price volume trend has not. If we check the Qs have not made a 52-week high. Now, the pattern on the Qs with the price volume trend is more or less exactly what you would want to see. In fact, it's a little more bullish on the Qs. Why? This high is higher than this corresponding peak in price, right? This high is higher than that. So we have confirmation of this breakout. Now, is it going to hold? I don't know. how do you use this in conjunction with regular stocks? If these were individual stocks and I made a 52-week high with an individual stock, but the price volume trend looked like hell like this, I probably just would choose not to buy it. At any one time in the market, there's thousands of stocks to choose from. The way I do my stock selection, that weeds it down to maybe a list of 100 or so that I'm actually paying attention to. So there's plenty of opportunity. There's no reason to take something that does not look totally good. There's just no reason to. There's always going to be another opportunity. Even in bear markets, people get bored in bear markets because nothing's going on. Well, that's the whole point of the membership. You only want to be in the market when there's market activity. But you're not going to know when the market activity starts up again if you're not getting the trade alerts. Anyway, you can also trade price volume trend just like you would the regular stock by using trend lines with it. So here we have a triangle forming up, and you can use these trend lines on a price volume trend the same way you would use the trend lines on a regular price chart. And so a lot of times you can spot a breakout in a price move before it actually happens by following price volume trend. Now in this case, this one hasn't broke out. This may or may not happen. I'm not making any kind of recommendation on the Russell 1000. I use VONG as a general thermometer of what growth stocks are doing rather than QQQ, because the VONG is a wider index and the QQQ is mostly dominated by the FANG stocks, right? It's just almost all of this price activity in here. It just has to do with what those 7 stocks are doing, where this one gets you a lot broader index. So if you look at the two, you can look at the Qs, and the Qs looks a lot more bearish than VONG. Well, why is that? Well, because the stocks that are driving the Qs right now are wildly overpriced. Therefore, they're probably not going to move as fast as the stocks that are making up VONG. So if you were going to make a decision between these two indexes, as to like which ETF should I trade, well, buy the VONG because it's a broader index and it's still going to get you the growth. Okay, I think we kind of ran off the rails there. So I'm going to throw in a bonus indicator. This one is useful when you're going through charts quickly. I use the swings to help me determine when buy and sell points have actually taken place. On the upside, I use a 3-day swing, and on the downside, I use a 5-day swing. Why? Well, again, because in general, the bias in the stock market is bullish, and it has been in the United States for at least 150 years. There's just a bullish bias. Now, maybe that's because the economy is great. Maybe that's because of inflation. It doesn't really matter. The fact of the matter is it's true. So because of that, I don't really want to get shaken out of a stock when I already know, in general, the bias is to the upside. But I also don't want to buy head fakes and sucker rallies and all these other ways that market manipulators use to hose you over. And so it turns out that if you're in leading stocks that are making new highs, and you wait for a 3 or 4 day pullback, which is what these swings indicate, and then you buy a close above those pullbacks, usually they're good breakouts. Usually, not all, but usually. And that's it. So my top 3 indicators: volume profile, I count that as 1. Price volume trend, swings, actually, I added in a 4th. So my top 3 indicators that I think make the most amount of sense and give you the biggest insight into what's actually going on in the market is going to be volume. You have to learn how to read volume and the volume profile so you can truly understand what's going on inside the price activity. The volatility stop loss, which in this case, this chart's not even showing it. That's interesting, right? Let's turn that back on. Where the hell did it go? Oh, I know why it's not showing it. So one of the other issues is I use TradingView, and TradingView, there's a lot of different ways to set up your charts. I typically have my charts set up where I look at 3. I'm going to do a whole separate video on that. Anyway, here's your volatility stop, and then price volume trend, which we already covered. That's pretty much all you need. Anyway, this has been John with StockStrategyCircle.com. If you want to get trade alerts that will show you what stocks are going to be the strongest under any market conditions and when I place trades, this is actually a live account. I actually do trade. Join StockStrategyCircle.com, and anytime I get a order confirmation, you're going to get alerted to the fill.